At something else, a particular stock which jumped 112% in trading yesterday. We had an $81 million deal which might just transform the mineral explorer Carpentaria into a mining house and launch a new magnetite iron ore province near Broken Hill. It's a farm-in agreement with BMG. It's designed to fast-track production but still allow Carpentaria to retain a major equity interest. Let's talk more about this deal. I'm joined in the studio by Executive Chairman Nick Sheard. Nick, great to have you in to speak about this 112% spike in your share price yesterday. Ticker code is CAP, but basically it's a deal for your New South Wales iron ore project. Just tell us how the deal works in practical terms. It sounds like basically cash injections, a series of cash injections from BMG.
Yes, there'll be a staged series of cash injections totaling $5 million in the next 3 months, and then it will there'll be another 2 stages of about $50 million that will come into the company. During that stage, however, BMG will be funding the exploration, they'll be funding the bankable feasibility study, and ultimately, assuming we go ahead, they'll be funding the building of the mine. Okay,
so their interest obviously is in something we've seen across the markets, a theme, getting their hands on the supply, basically, so that in future years they can obviously benefit from that.
That's right.
Is that how we see it?
Their aim is to build a mine that's about 20 million tonnes per annum concentrate of iron, and that's the ultimate aim. We will benefit from that. We will be having 4 million tonnes per annum in Carpentaria's name in the output.
So what's the strategy behind this? Because why wouldn't you be looking to raise money, get the money for exploration yourselves, and then keep it all at the end once it's all, or is it just too big a task?
It's too big a task for a company like ours, and if we want to fast track it, we would be really diluting our shareholders dramatically, because we'd have to go to the market. In this deal, there's no script outlay. We've retained our 68 million shares, so we're really a robust company now, but the money coming in allows us to fast track it. And ultimately having about, say, 4 million tonnes per annum iron concentrate sales for just Carpentaria shareholders is going to be really good.
You said that they're funding the exploration.
Yes.
With the cash injections, where's the money going that comes to Carpentaria?
We're going to use that to do further exploration on different projects. We're doing target generation. In fact, we've already sort of secured a new iron province north of Broken Hill. We think that's going to be, well, it's early stage exploration, but again, if it comes in, we'll be able to work that. But ultimately, we're going to be drilling our gold projects. We've got a tin project that's pretty robust that we're going to try and do some resource drilling on mid this year. So we've got quite a host of other projects to put the money into. With our joint venture partners, we've got quite a few others actually. Our total exploration budget this year, and that's mainly going to be on drilling, will be about $10 million, which is a phenomenal amount for a junior. So, and we'll be looking for coal, iron, gold, tin and copper with all that.
And so will you look in the future to these so-called farm-out kind of arrangements, or farm-in, is it? Farm-in? Farm-in arrangements, is that what the strategy becomes across the whole business?
It's not necessarily across the whole business, and now with the injection of funds we can push projects a lot further and therefore hold a bigger equity in them. But it is a good model, we believe, because it gives us more drilling in different commodities and different projects. And in exploration, the statistical chance of success is generally pretty low. And so the more drilling you're doing, in the more projects, the more chance of success you have.
Just tell us a bit more about BMG as well, because it's actually a privately owned company.
They're a privately owned company based in Sydney who have Asian-backed funds to fund them. I can't speak for them, obviously, but I know their aim is to try and and they are securing a large number of these iron projects, most of them small, well, all smaller than ours, in this district in South Australia, New South Wales. Ours is by far the largest one, but once they secure the other projects, they're going to have virtually 80 to 90% of a large iron province that was called the Braemar Iron Formation. It's hosted by the Braemar Iron Formation. We're calling it the Braemar Iron Province now. So it's going to be a fundamental. It's going to be a very large iron district focused around south of Broken Hill. It's great.
And if we look at the broader picture, we've got rising iron ore prices, even a changing of the pricing structure from the big miners in terms of the shorter term contracts which are being negotiated now. Is it these kind of stories that's actually made you really want to fast track these projects? I mean, we're looking down the barrel of sharply higher commodity prices. I suppose you want to get something happening, cashing in on that. I mean, is that where this strategy came from? You wanted to fast track it?
We want to fast track it so we can get some cash flows into Carpentaria. But the spot pricing of iron has made this really quite an excellent deal, because I believe for small producers, or not the BHPs and Rios, for the smaller guys, this is going to be a lot better. So it's going to mean faster cash. I think when you sell the material, it's going to be higher prices. So it's quite good. It's very good for us, I think.
Great to hear from you, Nick. Thank you very much. And Nick Sheard from Carpentaria, and the ticker code, of course, CAP. If you bought them yesterday, you'd be 112% richer on your investment, but trading at 43 cents on last check. Now, we have to check